Hey, how are you? I'm Duncan McPherson and welcome back to my channel. Today is my third video in my four-part series on Canadian real estate and non-residents. Specifically, how we interrogate and torture non-residents up here when it comes to renting real estate. So listen up if this applies to you. And if you haven't watched videos 1 and 2, make sure you do. And for more information on non-resident compliance, check me out at themactax.com. And don't forget to subscribe for more tips on the Canadian tax system and to avoid all the bull you're probably already experiencing up here. So again, this is the third in a four-part series where I will be discussing the bureaucratic torture and interrogation that you, as a non-resident, will be subjected to by renting out your Canadian real estate. Now, I'm going to go over things you must do when it comes to renting out your properties up here, but also things you must be wary of as well. So the first thing you got to do, let me paint a picture real quick. Let's say we're renting out our Toronto condo. Here in Canada, you must remit 25% of the gross rent you collect every month to the Canada Revenue Agency. As an aside, you may be able to remit 25% of the net rent every month, not the gross. I'll discuss this later on in the video. Obviously, you cannot remit withholding tax unless you have a Canadian tax ID number. And by now you should know what the hell I'm going to say about this. Don't even think about renting out Canadian real estate until you have your tax ID number. I've only said it in the last 2 videos, probably 5 times in each video. Okay, so let's go back to remitting, because this is where things get really weird up here. Say you have your tax ID number and you want to remit. Well, guess what? You can't. Here in Canada, you do not remit your rent withholdings to your personal tax account because we're crazy. You must open your CRA non-resident account with its own tax ID number and submit your monthly withholdings to this account. And for another point to consider, you can only apply for an NR account through the CRA online portal. And you can only access the CRA online portal if you have a tax ID number. How circuitous is this? That's why rule number 1 is you don't even think about renting Canadian real estate until you have a tax ID number. Period. End of sentence. Also note, the payments that you make to your NR account will ultimately get credited to your personal tax account when you file your personal tax return here in Canada. In fact, your NR account is attached to your personal tax account. Once this is done, it's pretty locked and you're going to be good. So if you start renting prior to having your tax ID number and your NR account, you're obviously going to start incurring interest and possibly penalties on your late remittances. And just something else for you to note, currently the CRA portal is not functioning well for non-residents. I've been actually on the phone 3 times this week with CRA because of this problem, and all 3 times they did tell me they were working on it. We have an open ticket. Well, that makes me feel a lot better. So just make sure you give yourself lots of time to get your tax ID number and your NR account number because things are pretty screwy right now and I don't know when they're going to be fixed. But I will say this, when it is fixed, it will work well. Believe it or not, the CRA online portal does work very well. It's really a shame that this is kind of screwed up right now because it's one of the things we actually do well up here. Okay, now the next thing to consider. I mentioned earlier that it is possible to remit the 25% on your net rental income, but not your gross rental income. Here's how you do it. You must know somebody in Canada, usually a close friend or family member, that is willing to sign Form NR6 undertaking. With this form, your Canadian friend or relative is undertaking to ensure that you remit all your withholdings and file all your returns. If you don't, the CRA can go after your friend or family member for all your unfiled returns and all your unremitted withholding taxes. So I hope you have a close friend or family in Canada because your accountant's not going to do it for you. I guarantee that. Every time we do, we get stiffed. So you're probably just going to have to live with remitting 25% of the gross if you don't have a friend or family member up here that can help you out. I know this is grotesquely unfair compared to the way the IRS / the Internal Revenue Code handles this, when you can do everything I just mentioned by attaching an 871D election to your 1040 NR, which takes 5 minutes to do when you file your return. I realize it's unbelievable almost that we go through what we go through when it's a 5-minute effort in the States, but it's the world we live in. As I said earlier, the 25% remittances are tax installments, so you will get credit for them when you file your annual personal tax return up here. As I mentioned earlier, this is the case even though they are remitted to your non-resident account, not to your personal tax account. Therefore, if you timely file your Canadian non-resident tax return, you will pay income tax up here on the net rental income not the gross income. Timely filed for this purpose means if you file your personal tax return within 2 years of the original due date. If it's longer than 2 years, you're going to be paying on the gross income, not the net income. There's one exception to this that I'm not getting into right now. As long as you have your Canadian tax ID number and your NR account number, CRA is really good about getting the refunds back to you, especially if you timely file. In this regard, Canada is actually nicer than the IRS is in the United States. In the USA, you only have 16 months from the original due date of the return to file and pay tax on the rental income, where if you don't, you are going to potentially be subjected to paying tax on the gross rent, not the net rent. And the last point I'm going to discuss today is that in Canada, your non-resident tax return, where you file and report your rental income, is known as a Section 216 return. On a Section 216 return, you only report rental income, nothing else. So if you happen to be working in Canada as well in the year and earned employment income, that employment income will get filed on a second and separate return known as a Section 115 return. In addition to employment income going on Section 115 returns, if you incur a capital gain up here, the capital gain is reported on a Section 115 return. And this is where things get really screwy up here. In the year you sell your rental property and incur a capital gain, the rental income and the recapture go on the 216 return, but the capital gain goes on the 115 return. So whether you sell that property for a gain or a loss in the year that is sold, you will actually be filing 2 separate Canadian tax returns. I know it's crazy, but I want you to know right now, it was not accountants that wrote up this law, I assure you. It was lawyers. Okay, obviously selling a Canadian rental property is a real storm. I am dedicating an entire video to it. It'll be my 4th video in this 4-part series, which means in our next and final video, I will discuss in detail this outlandish bureaucracy inflicted on a non-resident when you sell your rental property. And now for more info on renting real estate in Canada or any other tax issues regarding your tax filings in Canada, contact me at themactax.com to help you avoid the traps and pitfalls of investing in Canadian real estate up here. Or better yet, just click on the link below. We can work it together, and thank you for watching. I will see you in the 4th and final part of this series. Take care and see you then.